Welcome to the Greener Finance channel. Today we are going to discuss credit. How to get a high credit score in 2019. Expose. What is credit? Well, it's the ability to make payments over time. Sounds simple. Well, it's more to it. Let's first talk about the benefits of having good credit. First off, credit is an important financial tool in today's world. You can get a low down payment on a car if you have good credit. Your insurance is lower if you have good credit. Some jobs require a person to have good credit for the position. You will need to have good credit to rent or buy a house. If you have bad credit, you may have to pay a high deposit or even get denied. There are 5 factors that make up your credit score. The first factor is credit mix, which is 10% of a person credit score, which are broken down into 2 categories. The first category is revolving credit. Credit cards. Store credit cards are like Amazon and Walmart. Also, bank credit cards are like Chase Bank and Bank of America. Lines of credit are credit cards that a person get cash from, instead of making a purchase at a store. The second category is installment loans, car loans, student loans, house mortgages, and personal loans. The difference between revolving credit and installment loans are: the revolving credit, a person can pay a minimum balance for years or pay it in full if they wanted, while installment loans is a fixed amount that a person pays each month for a certain period. The second factor is new credit, which is 10% of a person's credit score. A person is judged by how recent they open up a credit line. When a person opens new credit, it lowers their scores. When this happens, a hard inquiry is on their credit report for a year. Some credit cards that offer great bonuses like travel miles and hotel stays will deny a person if they have too many inquiries. Too many new credit lines makes a person look desperate to lenders and they are considered a higher risk. The third factor is length of credit, which is 15% of a person's credit score. Length of credit is the average length of all a person credit line. For example, if a person has 3 credit cards, the first is 2 years old. The second is 4 years old. The third is 6 years old. The average age of a person credit line would be 4 years. The fourth factor is utilization, which is 30% of a person's credit score. Is how much a person owe on their credit line. For example, if James has a $1,000 credit card limit and he uses $400, then his credit utilization is 40%. The utilization is by dividing $1,000 by $400. A person should stay under 25% and pay it down to 2% to get the highest score possible. Remember, it doesn't matter if a person has a small limit, it matters what a person owes on their limit that affect their score. The fifth factor is payment history, which is 35% of a person credit score. The highest percent of a person credit score is the payment history. This is the most important part because one late payment can stay on a person's credit report for 7 years. When applying for credit, creditors want to see 24 months of good payment history. Putting direct pay on all credit accounts is a safe way to make sure payments are paid on time every month. I want to end with this: having good credit is not based on a person's income. Anybody can have a great credit score. If a person makes $1,000 a month or $10,000 a month, they can have a high credit score with both income levels. Having good credit is more about financial behavior and spending habits. A person should practice saving up money before they apply for credit, because if an emergency comes up, they can still make the payment. If you put in the work and use credit as a financial tool, you will see all the benefits of having good credit. Thank you for viewing the channel. If you want to hear more about credit and other financial topics, subscribe to the channel. Thank you for watching.